So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani, and today I'm joined by Spencer Cullor. Spencer is the founding principal of ApartmentVestors, a private equity multifamily investment company located in Kansas City. Their multifamily portfolio has expanded to include multifamily properties in Kansas, Missouri, and Oklahoma. With their investment partners, ApartmentVestors focuses on value-add projects where they can maximize the value of properties and returns for their investors. Spencer, welcome to the show.
Thank you for having me.
Absolutely. We were chatting offline, obviously seeing a lot of growth in your region now, which I'm sure, we were kind of mentioning is good and bad. But let's kind of start at the beginning. What led you to real estate?
Well, I kind of grew up in family businesses, so I kind of always had that entrepreneurial spirit. But I found myself out of college and stuff working for a software company. So I actually was working for a software company doing marketing and sales, and just couldn't get the entrepreneurial spirit out of myself. So I kept ended up building homes on the side while I was working.
Wow.
And that was right before the big market downturn in housing. So we kind of saw that things were taking longer and longer to sell as we were building them. So we decided to sell our last inventory there right before the crash. And then I was trying to find places that we could use our real estate knowledge, but make money all the way along the way instead of building it, waiting for a buyer, and then hopefully selling it for a profit. And in the meantime, as soon as you sell it, you're out of business until you build another one. So that's where I found commercial real estate. We kind of started on a small retail center. Don't recommend retail. Huge learning curve. We did okay, but it took us 5 years to get out of that deal. In the meantime, found multifamily real estate. And once we went there, kind of never looked back. So we kind of put blinders on for everything else and just focused on multifamily.
Awesome. I love it. Yeah. Sometimes you got to be humbled by different ventures in order to really remember or find your niche. And it's awesome you guys found that. So kind of talk about, obviously you're in the Midwest, kind of talk about some of the growth. It's kind of flown under the radar for a bit. I feel like, obviously relatively speaking to some of these other ones, but now it's on the map. I talked to a lot of people who were on the East Coast. Now they're looking in the Midwest. So kind of talk about, what that's been like.
Yeah, well, I think as the East Coast, the returns have been compressed so much on both coasts that I don't know, as a Midwesterner and understand the market here and knowing we always invested pretty fundamentally. So it was all about cash flow and debt coverage ratios and those things. And I feel like we've had a lot of East Coast, West Coast investors expecting this crazy appreciation like they've had on their coast and brought it here and kind of somewhat inflated the market. With new money pouring in and new to market people pouring in. But there definitely has been a significant growth in values over the last 2 years. Really accelerated kind of mid last year, just kind of took off to another level.
What kind of like economic and infrastructure is being put in place that's like sustaining this and kind of, influencing it?
Sure. It kind of depends on the market. I mean, here in Kansas City, they've been pretty pro growth. So we have some pretty big businesses here that have expanded. I've always felt like Kansas City's kind of been this hidden gem. So it's been a great kind of balance for what the cost of living versus what people make here for incomes. We have the professional sporting teams that have done well, and really it's really a sporting town with college basketball, football, and then the pro sports. And a lot of, I always feel like the coasts are very up and down. Kansas City and the Midwest stays pretty level and consistent. So it's been just a consistent grower. But I think a lot of what's driving these values up is chasing yield from investors on the coast. They can't find it there, so they're coming to a market that has traditionally produced some good yield on the investments, but maybe not as much appreciation. And it's really driven a lot of that cap rate suppression and push the appreciation much higher on these deals.
Yeah, it makes perfect sense. Like you said, that there's so much capital now. It's crazy, right? I mean, it's good and bad. You know, it's definitely a double-edged sword. Good because it's nice to be able to go out and feel comfortable raising capital for your deals, but also you're seeing it flood into some of these, you know, Kansas City is a primary market, but in terms, you know, related to like Phoenix and all that, you know, they're obviously chasing other places and it's starting to reflect there. So are you guys starting to look at potentially moving outside of your main markets, or anything changing in your kind of?
We have. I mean, we've been in 3 states doing business mainly. We may add a 4th. We've tried to stay within, 4 or 5 hours of our properties, and I think that's been good. But we've traditionally looked for undervalued properties, or properties that have deferred maintenance, or that we feel like the rents are under market and we can take up. And we've kind of made our bread and butter that type of property. So we're really good at fixing problems. And we have a vertically integrated company. So we have a construction side that really helps, that we control all that. We have a property management company and the investment company. So doing that, I feel like we've been able to really control cost, which is a big deal today, especially with all the inflation and materials and everything that we've been able to also manage like owners, because we are an owner in it. So we're managing for the right decision to add value to the property, even if it means a little less yield up front.
Yeah, it makes total sense. And that vertical integration really is such a key component. So kind of talk about the strategy behind that. Was that the plan all along? You obviously had the construction background. So, when you started ApartmentVestors, did the construction come right along with it, or was that kind of a progression?
Yeah, we'd kind of built homes and things. And so it became pretty natural for us to go into a property right off the bat and see, hey, we could do this, this, and this that would improve it right off the bat. The real learning curve with that is, okay, you can do those improvements, but what's going to add value to the property? Because it's not like a residential property, your home, where you do the X and you pump out Y. There's a lot more science to the multifamily side with, you'll see people that their business model maybe to come in and spend $10,000 a unit on interiors and this and that. But we've been able to get the same rent growth they've had spending half by knowing which improvements really drive value and really matter to the tenant.
Right. Kind of touch on some of those. What are some that you found have really been your main drivers?
You really have to look at it on a market by market basis and a property specific basis. But I always tell people the first thing, people can't drive by your property and want to come in the door. You're going to have a hard time raising rents. So you've got to make the outside look good. I see people that do it kind of backwards. Sometimes they focus all on the interiors, but they can't get that person. I've always been the belief that people decide what they're going to pay when they drive up to your property and they come in the office. So if it looks like this and this, and it looks dated and uncared for, they're going to expect to pay way less, or they're not going to come in your door. So really in a really competitive market, you've got to look good first.
Absolutely. Yeah, I couldn't agree more, right? That outside aesthetic really is what's going to pull them in, even potential rebrand based on kind of the, the name or the reputation of the property, that could potentially be a play as well. So as you
we
kind
revamped every one of our properties. I think
What's
we've only bought one property the entire time I've been in business that we haven't rebranded.
okay.
I
So
think
even
that is
if it had a good name, you're still
most of the time, because we're trying to take it to a different level than it's been. We haven't taken over a ton with awesome reputations right out of the gate. We've taken on a few, but not usually. We're taking on something that we can significantly improve.
Absolutely. Absolutely. So what are some of, obviously you're well versed in the Kansas City market, you're in some of these others. What are kind of some of the economic, indicators that you guys really pay attention to that matter the most for you when you go into a market?
Well, I think you've got to know what people's median income is. You've got to know what your renters make, because if they're going to struggle to pay, we see this in college towns a lot where they only make so much money. There's going to be a real limit on what rents can go to there. And so you've got to look at what your renter base actually makes, because that will determine what you can get for rent.
Okay. Yeah, that's a huge one for sure. We were kind of chatting about Kansas City. It seems like the median income is really starting to go up, starting to put some infrastructure in place. What is it about these other markets like Missouri, Oklahoma? Are they very similar in how they, kind of appear compared to Kansas as well?
Yeah, it kind of depends on, again, that specific city, but we definitely look at cities who are investing in growth in their city from their government. I think that's a key component. You'll see we've done business in lots of different cities now, and there are definitely some that are pro-growth and some that are not. And being in a pro-growth city is really important. If you want to see job growth, if you want to see rent growth, you need to be in a city that is friendly to doing business in. And there's some that are much more landlord or renter friendly versus landlord friendly, and it can kind of tell how hard it's going to be to do business in that town.
What's some of the logic behind not wanting growth, do you think? Have you kind of dissected any of that?
Yeah, I mean, they all say they want growth, but there's a difference a lot of time between what they say and their actions. And so you've got to pay a lot more attention to the actions of that.
Absolutely. Yeah, that makes perfect sense.
And how they support the safety of their citizens, for one. Like, are they going to put money into their police department? Are they going to support a low crime environment or a high crime environment? And we've seen that and how that affects down to the property level, different cities.
Absolutely. And I feel like that's a kind of an underrated metric, right? Of course, we, try to avoid war zones, but, how much is the city actually investing in, police and their effort to stop that is definitely a big factor. So kind of talk about now what you see, kind of in the near future as the market's kind of doing what it's doing, some economic uncertainty, and then, kind of your outlook maybe for the next couple of years.
Sure. I wish I had a total crystal ball.
It's a little fuzzy.
That would be awesome. It's definitely kind of a tough environment right now because you do have interest rates rising, which would traditionally push values down. But you've got so much capital chasing deals that the cap rates aren't really coming up. So you've got kind of this weird environment. So it's going to be real interesting to see what happens over 1-2 years. And if we do head into more of a recession to slow down inflation, but I think a lot of people are running to multifamily investments because they do see the inflation that's happening in the economy. So I think we're kind of in this real delicate period right now where there is some kind of risk with what's going to happen in the market. I think if you stick with fundamentals though, and if you do base your deals and your offers based on real numbers that aren't pie in the sky from a broker pro formas, and you look at real cash flow and debt coverage ratios, you'll be safe no matter what happens in the market. And that's what I always, my dad will always ask me, hey, what do you think is going to happen in the market? And my dad, I don't really care, because we invest based on fundamentals that are good. When I wouldn't do anything different than we're doing now if the market was bad or good. So I think that's where you have to be careful in this market, that you can't get caught up in, well, for the last 10 months, we had 10% rent growth. Well, that's not normal in our market. So at some point it's going to come, and you can't pro forma out your deal on those kind of numbers. And, it's always great if that happens for your deals and it makes them amplified. But if you're counting on that to happen, you're going to have some sleepless nights.
Absolutely. And I think right now, and at least for the near future, the supply demand issue is definitely propping the market up in terms of, there's still a lot of availability. Obviously, any equity is, baked in equity is very, very tight right now, which is making it very difficult, even in the value add space, right? You find these heavy lifts, and typically you'd have that extra bit kind of baked in, and even that's being taken away.
Well, and if you can't get that in a heavy lift, don't do the heavy lift, because there's so much other risk that comes along with that. I don't know. Today, I think it's a good day to invest in really stabilized, strong assets. I think asset quality matters when it comes to a tougher market. And if the brokers are going to take that value out of the value add deals, we've looked at it, and the last two deals we bought weren't really value add, but they're doing really well right now, because if you're going to pay the same price in one you have to do all the work and one you don't, it's better to just take the one that's solid now, instead of making a ton of assumptions, because there's a lot of work. People underestimate the work and the risk in a value add deal, especially if you have an unexperienced operator that you're dealing with. It's tough if the margins are tight. So
absolutely. So kind of touch on, have you moved up and gotten some like class A, like some real stable?
We haven't done class A yet, but we've been in some solid B deals in good markets, good areas. Those have been really strong.
Awesome. I love it. So kind of talk about now, building your investor base, maintaining your investor base in this environment when deal flow is kind of restricting, and, being transparent, keeping that transparency, but also, like really holding on to those investors, even though, you may not have the deal flow.
Yeah, well, I think you've got to stay in front of them, and they've got to know your vision, what you're working on, why you're doing what you're doing. How many deals are you looking at? Sometimes I wouldn't, most operators wouldn't share that with their investors, but we're trying to be more active about communicating that out, and that in showing that as a real positive, that, hey, we're looking at a ton of deals and we're putting in offers, but we're not going to put in a crazy offer just to get the deal. It's got to be one that works in our model, and you guys are used to doing business with us in this model. It's been successful. We're taking your money very seriously here. And so I think you've just got to be really proactive in your communications.
Absolutely. I couldn't agree more. Are you do you guys take on 1031 or deal a lot with 1031s or 1031 yourself, or kind of touch on?
We've done several 1031s ourselves, exchanges. We just completed 2 in January that were pretty stressful. The timelines on those, we also took on an investment partner last year that was had 2 weeks left on a 1031 and said, hey, do you have anything? We can't find a deal. Use some of our broker connections and put a deal together that I think is going to do really well, that we were able to structure with their 1031 exchange. So we did work with an investor client like that, and then we've done several on our own to flip deals. And the key right now is making sure you have a replacement property, or at least a good chance of a replacement property identified before you pull the trigger on the sale. And even when that happens, sometimes it can be really difficult. We had on this last one, we had 3 deals lined up, and 2 of them had pretty much agreed to price and everything else. And then one of their partners on each one of those deals decided they didn't want to sell and wouldn't sell. And so it left us scrambling. We identified, a couple of properties in the timeline, but didn't actually get a contract for 2 weeks after our identification period. And that can be pretty stressful. But I think 1031s are an awesome tool for growing your portfolio and increasing the quality. We went from a lot of smaller properties into bigger assets that are nicer and better areas. And I think they're a huge tool that investors can use in multifamily that can be extremely powerful.
Absolutely. And certainly, especially if you have a large enough, 1031, obviously can't be on the LP side, got to bring them in as a partner, but certainly, very advantageous, like you said, if used correctly. One question I have is, if you identify a property and it falls through, does that period start over?
No. No, you can identify up to 3 properties and you have to close on 1. So you have the 45 days to identify up to 3 properties. So you really need to feel confident that you've got another deal lined up. And so what has really kind of slowed the market a little more right now and made it even tougher is that you've got some sellers out there that would love to sell and cash in on some of these increased values, but they're really nervous about finding a replacement property. And so they can't pull the trigger even though they want to, because they're not willing to take that risk. And so that can be really difficult. So getting that all lined up, that's where really great broker connections and relationships can really pay off.
Absolutely. Yeah, that's not even a factor I really even thought about, is how many of these sellers are on 1031 or going to do a 1031, and because they're so worried about identifying new property, they're not willing to sell. So that's really, really
some of these people have, bought the property 10 years ago, and the market has really appreciated over that amount of time. And so they've got these huge gains, and that's a huge taxable gain to them if they can't find something. So it's hard to get them to let loose of an asset that's really producing for them, even though they'd like to.
Interesting. That's a really awesome point.
It's made for some of this imbalance in the market where there's not enough deals. And so the values have gone up even higher.
Yeah.
Making it more tempting to take that risk.
Yeah, we're kind of reaching that perfect storm point where something's got to give somewhere. What
there
is
will
it
be
that,
an adjustment.
What do you? So we kind of talked about the supply and demand thing, which is really propping up the market right now. The very obvious. There's a supply issue. What is it that you think will kind of crack and maybe give in first?
I think the thing that's going to have to happen is, well, if interest rates continue up, there's going to have to be a push on values. because you've got to be able to have more yield or a little higher cap rate to handle the higher interest rates. So I think that's probably the biggest thing that we're looking at there that could help adjust the market. Obviously, the market going into more of a recession would do that, which can happen sometimes if they raise the interest rates too fast. So there's a lot of that. I also think, one of the other things leading to this supply imbalance is that single family home prices have gone up. So a starter home in, say, Kansas City that was 150,000 is now 250,000. And so it's just a big difference. So it's kept a lot of those people that would be homeowners staying in the rental market. So there's this real imbalance. So I think more supply coming on will do it, but we're kind of in this perfect storm where all the supply lines from COVID and everything shutting down. So material costs have gone up and we've had all this inflation. So it's really, really expensive to build. So a property that maybe was $180,000 a unit to build just 2 years ago is maybe $250,000 a door to build now. And it just, at some point, unless incomes continue to go up, you're going to run out of renters that can afford to pay those prices. So things will have to adjust.
Absolutely. Yeah, that's a really great point. And with your, construction arm and background, are you guys getting into development or looking into that as a possibility?
We've never been willing to wait that long on the development side. So we've really stuck to more properties that are already there and doing the redevelopment of them or the renovations of it, because then we can get cash flow right out of the gate and then also get the upside of it without having to wait 3 years. I know one thing that building houses taught me was that when you start building and the 9 months or 6 months it takes to build it, there can be a lot of changes that happen in the market. And so when you've started in a hot market, it may be cold by the time you're done. And that the longer that house sits, the less money you make, or you may not make any money. That can be the same way in development. But some of these multifamily deals can take 3 years to build from start to finish. And so that market can change a lot over that time. I think anybody that had budgets 2 years ago for construction and started their deal, and then, I know a house that was being built that the lumber cost went up by $100,000 over the last year. Well, wow. Imagine that on a 300-unit apartment complex. So somebody at the end of the day has to eat those costs, or you've got to get a lot higher rents. So there is a lot of risk with development, and that's why people who do it well might do really well, because it is difficult. So we've kind of stuck with our model that we know it works for us. We will do some development, and we have some projects where we have some extra land with them that we're looking at maybe developing some of the extra land. But I don't imagine doing an out of ground development anytime real soon.
Fair enough. Yeah, I mean, makes perfect sense, right? And we're kind of navigating that right now. We're working on potentially a ground up self-storage here. It'd be about 30 minutes west of Salt Lake City in Tooele. Mm-hmm. And same thing, right? Like, land is a good price, but it's that variability in labor and materials that it's so hard to account for. It's like, okay, do we, increase our CapEx by, 20%, is that going to be enough? So yeah. It's tough to navigate, but ultimately, if you're willing to do it on the other end are typically some good margins. So that's kind of what we're banking on, but we'll see what happens. But
there's people that do it really well. And there's a lot of money to be made if you do. It depending on what your model is for your business.
Absolutely. Yeah. Good partners are definitely the key there. People who've done it before and can move quickly. The nice thing about self-storage, especially if you find good builder, is it's kind of a plug and play for them, mm-hmm. right? They come in, do it, boom, done. So
And those
that
you
is
can
one
put
of
up really quickly, which is nice. So you kind of lower your risk on some of the timeline costs.
Exactly. Well, we are coming up on time. So I do have 5 questions that I ask all of my guests. It's the final 5. First question is, what's the best advice you've gotten from a mentor?
I think just to not worry about what everybody else is doing. Focus on what's best for you in your model. So we early on put blinders on that we're going to do this and we're going to do it really well. I think that made all the difference in the world.
Awesome. I love that. It's so true. Stay in your lane, as they say. What is it about your career that makes you feel like you're fulfilling your why?
Well, I get to work from home a lot. I've got 2 small girls that I get to see grow up and provide a good lifestyle for them and solid education. And I like that I get to be around while they're growing up. I know that's really hard for a lot of entrepreneurs and people that are running businesses, but one of the things I love about this is it is a lifestyle business and I can involve my family in it.
Awesome. I love that so much. Such a great part of this is kind of that freedom. What is your favorite non-real estate or investment related book?
I always liked growing up The Magic of Thinking Big.
Ooh, okay.
I thought that was a great book. I've read it a few times. I also liked Maximum Achievement growing up. So I've read a lot of those through college and things, and I felt like it gave me a lot of direction.
Awesome. I love that. If you could have any superpower, what would it be?
I think to really be able to understand what people are really thinking would be awesome. And especially dealing with brokers all the time or our sellers, to really know what they needed and wanted. That would be great.
I love that. It's such a great point. Yeah.
I think my wife would love that too, if I had that ability.
I know I had I don't know if you know who Gene Trowbridge is. He's I had him on and he said the same thing. He's like, I wish that my superpower was knowing what my wife actually meant. After 55 years of marriage, I still am not sure what she means sometimes.
Yeah, communication, being able to communicate well would be awesome.
I love it. And last one, what's the best way for people to get a hold of you and learn more? Sure.
They can reach us on our website at ApartmentVestors.com or give me a call at 913-324-5900. We'd love to work with others and that's what makes all this possible. So
awesome. I love it. Spencer, thank you so much. It's been amazing.
Yeah, I appreciate your time.
Absolutely. Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.